Welcome back. Today we want to learn something about the breaker model. This is an ICT concept, the breaker model. So before you understand the breaker model, you need to understand an order block. So the first thing we start with before you get to breakers is an order block. There are two types of order block: bullish order block, which is fact this as the last the last sell candle or a series of sell candles before an aggressive buy. Okay, that's what a bullish order block is. So we have a bearish order block. So bearish order block is the last buy candle or or a series of buy candles before an aggressive sell. Okay? That's what a bearish order block is. So, bullish order block is the last sell candle or a series of sell candles before an aggressive buy. Okay, so bearish order block is the last buy candle or a series of buy candles before an aggressive sell. I hope you understand that. So we've said that for you to understand the breaker model, you need to understand what an order block is. In this case, when having a bullish order block, we expect support. In case of a bearish order block, we expect resistance. So let me show you some diagrams before we get into the charts. So I want to draw the bullish market structure. High, high, low. Price trades above the previous high. This is break of structure to form a new high. Price does a retracement to a discounted key level. Price trades above the previous high, break of structure. Price does a retracement. Then price trades above the previous high to form another high. So you notice that the price doesn't go below the high lows, the swing lows. It means that we are experiencing resistance, support from these key levels. But the price is trading above the highs. That means this break of structure. Break of structure signals trend continuation. Okay, so once the price trades below the previous swing low or a high low, it means the support area has been broken. So now it will start offering resistance. So we expect the price to do a retracement after displacement and then form a new lower low like that. This is break of structure, new lower low. Price does a retracement to a key level, experiences resistance, goes below the previous lower low. This is break of structure signaling trend continuation. You see, price comes there and goes below, and so on and so forth. So we're here to learn the breaker, the previous area of support that will turn into an area of resistance. The price does not trade below the high lows. It means these areas are our support areas. So I take my rectangle, then I mark the order block like that. So the price is supposed to come here and go up. Instead, the price comes and displaces the high low. It means the support area has been broken. That is why now the price comes in, goes out. Means now this is a breaker. Okay, a breaker is a failed order block. A failed order block. Okay, a failed order block is an order block that has failed. If the order block is supposed to offer support and fails to offer support, now it will start offering resistance. So let's check from the other side, from bearish to bullish. So you just go take a path. So in a bearish trend, the price forms lower highs, lower low, lower low. Price comes resistance, Break of structure, price trades to form a new lower low. Price comes, resistance, new lower low. You notice the price does not go above the previous swing highs. Those are areas of resistance. Price does a retracement. If you get pushed down like that, this break of structure, break of structure, break of structure. Break of structure signals trend continuation. So this is the previous area of resistance. So if we need a breaker, we expect the price to come and trade above the previous swing highs like this. And then it means the areas of resistance will have failed. Now will be an area of support. We expect after a displacement, there's a retracement, and then we form a new high like that, like that. So the thing is, this area is where the order block was, like this. See? So once the price comes and closes above the order block becomes a breaker. There is, you see, price does a retracement, goes up. Simple. Let's get into the charts. See what happens. We can go on 15 minutes time frame or whatever high time frame. Maybe 15 minutes time frame. We can identify them. Okay. Let us see. Okay. What do we have here? You say the first thing is to look for an order block that will fail. Okay, look here. What do you see? A series of buy candles before an aggressive sell that led to break of structure. Like this. This break of structure. Liquidity has been taken out here. POS. Like that. So this is an order block. The last but two buy candles before an aggressive sell that led to break of structure. Once the price comes and closes above, it means the resistance area has failed. Price comes back, does a retracement and goes up, just like we said. See, the order block turned into a breaker. The order block was supposed to offer us with resistance to the downside. But now, once the candle came and closed above with a body, it means that was displacement, turning into an area of support. Price comes in, goes out. You see, easy stuff. Let us look for another one. Okay, you see, this is the most recent price action that we have here. Okay, we can have this, for instance. We can have, can you see, a series of down close candles. These three candles like this. If the price comes and closes below, or we can even actually take this one here. You see, the last sell candle before this buy that did a stop and up here is an order block like this. See, so this is an order block. But once the price came and closed below like this area was supposed to offer us with support. But once these candles came and closed with a displacement, it means the area turned into an area of resistance now. That is why you have the next candle coming inside and going out like that. Simple stuff, you see. It's very easy. What do we have here? Let's see. I don't know if you can see it, but I can see it. You see the last buy candle before an aggressive sell that did a stop hunt here. This break of structure like this. POS like this. Okay, so take your rectangle, mark these two buy candles like this. You see the price is supposed to come, fill them, or propagate resistance and go down. So once the price came and mitigated this order block, it became low probability. That is why you see the price came closed above. You see the price closed above the order block, and then it will now act as an area of support. The candles came inside, got out. This is very easy. Let us look for another one. Okay. Breakers are very easy to understand. You shouldn't have problems understanding them. So we have here the last sell candle or a series of sell candles before aggressive buy that swept liquidity like that. That is an order block. So the price is supposed to get this is a bullish order block. The price is supposed to experience support from this key level. But what happens? The price comes, closes below. It means the area of support has been violated. Once the price closes below with the body, it becomes now low probability. As you can see, this is a better displacement to the downside. It means the order block failed terribly. Now the order block turned into a breaker block like that. You see, the price came in, went out. You see, so there's something you need to know. Factors that lead to a valid order block. You see, a valid order block is the one that will still be a valid breaker, that will be high probability. So a valid order block. The first thing about a valid order block is must lead to break of structure or change of character. Change of character. You see, must be unmitigated. So the order block must not have been used before. Mitigation, like the order block will, if it has to be high probability, must not be mitigated. So it must be unmitigated. So for instance, you can see here, you can see the order block. The first time before it closed below, you see the price came. You see the price came the first time, got support. So hence the order block became low probability now, and then closed below. You see, that is it. So these order blocks, once they're mitigated, they become low probability. Like this one now. You see, this is an order block. These last buy candles before an aggressive sell. Where did price mitigate them? You see, it swept liquidity here. So it became an order block once the price did a stop and below here. Like this. Like that. So this is where the price mitigated the order block. Hence it became low probability. That is why you see the next time the price came above, it violated the order block. There's also another breaker here. Let me show you. You see? Can you see this? I think I showed you this. These last two buy candles before an aggressive sell. Price comes closes above, turn into a breaker. Should be easy. So I'll be showing you how this works as time goes. Thank you for watching.